Good morning. My name is Cesar Borja and I'm a Portuguese analyst. And we're here to cover Sheng Tech. Ticker symbol is SDTH. This is the chart since the IPO. I believe the stock was traded over the OTCBB, but then it moved to the Nasdaq and liquidity improved a bit here, but still very low liquidity stock and very volatile here. Let's see the short-term chart. Well, there's no trend. The stock went up here when the company gave full year 2007 guidance of, I believe it was 44. Let me check that. It was 44 cents per share. Just a second, please. Yes, about 44 cents per share on about 97 million in revenues. So the stock had this nice jump here, and then it had some follow through, but it came off to almost 4.5. So at here it was trading at just 10 times earnings. So it moved up here before the second quarter earnings release, and it opened higher, but it is coming back down now. It is at let me check here. It actually just turned negative. It is at $5.35 now. Okay. As for the fundamentals, I heard the conference call didn't get much because it was in Chinese and translation didn't go very well. And well, I made some estimates. Here's my evaluation model. We have here the initial share price, which is $5.44, the current share price. The share count stands at 54.26 million, and it has remained exactly the same since the year ago level. So this is a good thing. However, I read over the 10Q that management can issue a lot of preferred shares, convertible preferred shares, and that always puts a cloud on valuation because at any time management can take away the value of common shares and put it in preferred shares. So that's not a good situation. So as for a dilution, let me try to explain this model very fast. These yellow lines are known facts. These four white lines, the dilution factor, the revenue CAGR, final net profit margin estimate, and earnings per share multiple estimate, are my estimates, and these dark yellow lines are calculated by this Excel spreadsheet. So I get to a final share count of 55.9 million. I expect an increase of just 1% per year, not regarding that preferred shares issue. And initial revenue $89.7 million, and I expect revenues to grow about 30% a year going forward, which gives me a final revenue for fiscal 2009 of almost $200 million. Initial net profit margin is quite rich at 26.6%, and I expect the company to be able to maintain this at 25% or so. And this gives me final net income for 2009 of 49.3 million, which means 91 cents per share. If we apply the average earnings multiple of the chemicals, you can check here. Let me try to put it here. Not easy. Of the chemicals major diversified industry, it has an average PE of 15.66, so I've applied that here, and this gives me a final estimated share price of $14.22 and a share price CAGR of 37.8%, which I consider attractive but not terribly so. So on a 1 to 10 scale I give it an 8. So thank you, bye.